it frequently happens that some news about Coca-Cola comes out, positive or negative, and investors, small retail investors generally, rush in to buy or sell Coke. And they inadvertently buy the stock which has the ticker Coke, COKE, which is actually the bottling company, which trades at a terrible multiple, which is not as volatile and which doesn't move on any news because it's like a utility. And we saw a parallel of that in the Indian market 2 weeks back. LG Electronics listed. It listed at quite a premium, like 50%. And people were rushing in to buy it and accidentally bought shares of another small cap company which has a similar ticker. That company is called LG Balakrishnan, but people ended up buying shares of that. This happens all the time. It's always funny.
Welcome back to What Was That, where Nitesh and I discuss tech and business news. I give the very unique Delhi perspective, and Nitesh brings in the Bangalore perspective. We will not identify our locations any more than that ever, because you never know who might get pissed off at what, right? Hi Nitesh, how's life?
Vineet, do you keep a baseball bat handy for recordings?
I should. I really should. I have 3 guitars. One is a classical. It will break at like the at a whiff of someone. One is an electric that I could expend. Actually, it's quite old. I'll be like be the heavy metal guy, but on an attacker's head.
Yes.
But NCR is doing very well today. In fact, so I have been taught by everything I've ever read about stock market that bigger number is better.
Naturally, yeah.
And today in Delhi, number is very big. I believe it's around 900, 950. Best number ever. Like great number. So Delhi is doing fantastic. Very good number today.
All-time highs.
I don't know because we never know, right? Like because it's like that Chernobyl episode. Number limit.
3.6 on them.
Exactly. So 999 is the limit. Yeah. But yeah. So yeah, that's what's been going on in Delhi.
All our chickens are coming to roost. Lenskart IPO closed. By value, Monjaro is the highest selling pharma brand in India for October. By value, not by volume. That's still antibiotics and anti-diabetic and hypertensive drugs, all the usual suspects. But by value, Monjaro is the highest.
And the tech stock market saw a bit of a slight cooling, I would say, and a bit more fear on the.
I would categorize it as a wobble. That's exactly what it was. It was a wobble. We shouldn't be discussing markets, but since this is not actually, it fits.
It's news, right? Like you can't separate business news from markets.
Friday, the S&P and the Nasdaq opened way down, and it came back to par in like the last few minutes of the trading session, because that would also decide the weekly close, right? Because it was Friday yesterday. So terrifying. It was a wobble, and we are basically in a Bugatti going flat out on the autobahn. So a wobble can be catastrophic. Right?
Is that also your story today?
That wobble.
Are we both converging on the same story?
Let's find out.
We shall find out. But also,
I am very, very excited. I'm positively gleeful today. I have tickets for later in the day to watch Om Shanti Om in the theater. And I'm very, very excited for that.
Om Shanti Om is back in the theaters?
Because of Shah Rukh's 50th, 60th, I don't know, some birthday. So, Mehuna, Om Shanti Om, and all his.
Yeah, I have always wondered, why don't they do this more often? Just show classics. Just do 3 screenings of Sholay every week, or not even every week, just bring them back. Just show Jani Bhi Ho Yaro, well, not in this environment, but show random popular movies. Why not?
They do.
I don't get it. Why don't they do?
It's a solid part of PVR's business model now. Last week, Godfather 2 was showing. No anniversary, no occasion, nothing. It was just randomly on. They're recycling many of the classics. No, and I gotta say they're writing advice, but PVR has a program. I don't know if it's still on, but they launched it with a lot of fanfare where you could pick a movie from their back catalog, pick a show time, pick a venue, like say PVR Coca-Cola, and if enough people, so it would start showing everywhere on Book My Show and on the PVR website. If enough people booked seats for them to break even, they would actually do the screening. Like crowdsourcing screenings from PVR's massive back catalog.
I want to see Jurassic Park. I want to see Lord of the Rings extended editions. Apparently, Kill Bill is coming back into the theaters as 1 4-hour combined film. That should be fun. That I'm going to watch.
Yeah, but are there any full, like, genuine IMAXs in Delhi? I don't think so, right?
Yeah. PVR Priya. Vasant Vihar.
Is it the full size or is it the
What is a full? It's not a dome. I don't think we have domes, but it isn't that laser. The new tech.
Okay, no, but the IMAX experience I am talking about, to my knowledge, there was just one screen which was compatible with that, or which adhered to those standards. That was in Prasad's, Hyderabad. And I saw a very nice YouTube video that said that that theater was killed by price caps on tickets, because IMAX is way more expensive. It's 4 times the size of a normal screen, the multiplex screens that we are used to now, and nearly double the old single screens that we used to see. Prasad's is massive.
But 4 times size of something that has gotten tiny. Like the average movie screen now feels barely bigger than my TV.
Yeah. Which is sad, no?
Yeah. I'm not paying like 500 rupees plus like buying 3 million rupees worth of popcorn to see like a small screen.
Yeah.
Yes. Let us begin. But before I begin with my first story, so bit of an add-on to my last week's video AI story, really, which is really funny and keeps getting funnier as things go along, which is Coke does an annual holidays ad.
Yeah.
The trucks are coming, Santa is coming, blah, blah, blah. Right. Though I believe they call him Saint Nicholas to not run into. Is there no copy? Anyhow, whatever. Right. It's a tradition. Right. The ad is very similar every year. It's hardly anything super creative. It's just a tradition.
Yeah.
To signal Christmas season coming.
Mm-hmm.
So last year they did it in AI, got a lot of flack.
Oh, okay.
This year they did it in AI again, got even more flack. But they sidestepped some of the issues from last year. No people this time, just animals. It looked like Zootopia mixed in with Kung Fu Panda, like all those characters. The penguins the penguins were where? Madagascar?
Madagascar.
Yeah. It looked like every famous character put in there, but obviously not. So fully AI generated video got a lot of flack. Again, the flack initially is always cultural. Why do you need to do this? You're like among the richest companies in the world.
Yeah.
Right. Just hire animators. Which is the usual cultural whatever. Why do we need this? So, but added on, there was a LinkedIn post that went viral. LinkedIn is making fun of AI. Imagine. I
told you we're in a post AI world.
We are getting there. Absolutely. Things kept changing. The bottle cap, the bottle ka, whatever you call it.
Yeah.
Didn't seem perfectly designed. The trucks featured in the ad, the number of wheels kept changing again and again and again.
Okay.
Right. And the comments got really funny. Let me see.
While you look that up, the Coke bottle silhouette is like iconic. How can you mess with that?
Yeah. So some of the takes are like, this is supposed to be the same truck, like with screenshots. Right. The truck is the main character, the focus of the entire production, and it's janky, uncontrollable garbage.
Right.
And it does. it keeps changing, and which is what we've constantly seen with video AI, right? Like consistency. Consistency can happen, but it needs so much work. And this is Coke doing its annual ad, which people look forward to. Why, I don't know, but capitalism, right? So, yeah. So, huge backlash, both in terms of the cultural whatever and also terrible production values. So, then the AI studio that actually made the ad with Coke, they released a video in response saying, where is that? Once again, our Coca-Cola Holidays Are Coming film is getting a lot of attention. Attention is a nice way to put it. But what most people don't see, so after attention, there is an M dash, which those who use ChatGPT know what that means. But what most people don't see is what goes on behind the scenes. And they released a behind the scenes video. The backlash began, and showing, there's sketches going on, there's Photoshop work happening. They said there's like more than 100 people involved who made 70,000 AI clips and then brought it down to what was actually used. Imagine generating 70,000 clips and then bringing it down to a usable, what is a 45-second ad? Right, with no people speaking, which also says a lot. It got funny because people started picking flaws in the behind the scenes video itself. And I do need to link to this, obviously, but
show that it was staged.
It was AI generated. The staging the human aspect of it, and you tell that some of those what they're showing on screens is AI generated. So there's somebody sketching on with an Apple Pencil on a tablet, right, and zooming in, and you can see that the pencil is not doing anything.
Right.
It is just on some image that is being zoomed in and totally pixelated. There is sketching going on, but not going on at all. And people saying that, look, like close up on this sketch, you can see that this is AI generated because the buttons don't match up on the cartoon characters, whatever.
Yeah.
There is one very brief clip of someone using Photoshop, and somebody zoomed in on that, and basically Photoshop works on layers, right? So you start with the background and you keep adding text layers and image layers and blah blah blah. There's only a background layer. So they literally, to stage this, they imported the image from the video into Photoshop to show that they're working on it, and that's it. So the community notes on these tweets are quite amazing. So there was an AI video, there was a backlash, there was an AI video to respond to the backlash, and the AI video in response to the backlash had quite a bit of backlash.
Two thoughts. One, fittingly, it is the 5-year anniversary of the Four Seasons landscaping press conference. Which, if that's the first time you're hearing about that, welcome to the internet.
Oh man, glorious day in internet history.
Which thematically is the same thing, right? Once you make a mistake and you're caught in the lie, you don't acknowledge it, you double down and pretend like that was your plan all along. Second, the agency probably charged Coke a bomb for this. So, yeah, they have to justify it now, right? No, we had so many people involved. And of course, that's why we charged you for so many billable hours or whatever.
And it's funny, some of the backlash is, look, if you have a bunch of animators using AI as, like we discussed last week, right? If it's another input, sure.
Yeah, then it's fine. Yeah.
Right. And again, we do AI video. We've done AI video that looks so much better, like more professional than this. What is going on here?
You should pitch Coke. The beverage.
Yeah. The other is not like, I don't think they advertise much. They don't need to.
Another thing which links into our last week's episode, which I actually wrote down somewhere but forgot to bring up. It frequently happens that some news about Coca-Cola comes out, positive or negative, and investors, small retail investors generally, rush in to buy or sell Coke. And they inadvertently buy the stock which has the ticker Coke, COKE, which is actually the bottling company, which trades at a terrible multiple, which is not as volatile and which doesn't move on any news because it's like a utility. And We saw a parallel of that in the Indian market 2 weeks back. LG Electronics listed. It listed at quite a premium, like 50%. And people were rushing in to buy it and accidentally bought shares of another small cap company which has a similar ticker. That company is called LG Balakrishnan, but people ended up buying shares of that. This happens all the time. It's always funny.
Are we allowed to give investing advice that please invest in stuff that you want to invest in? No, that is also not investing advice, everyone. There is no investing advice.
It is tailoring advice. Measure twice, cut once. Also applies here.
Yeah.
Let's go.
So let's go. My first story is on the wobble that we spoke about. That a lot of the media reporting now. So yeah, the stock market absolutely saw that wobble because earnings reports came out and people are now making that link between free cash flow not following trends or following all these investments. And I will go deeper into that. But one really funny thing was that there was this podcast, right, with the CEO of this fund called Altimeter Capital, which is an investor in OpenAI. He had Sam Altman on. Right. And this guy is an investor in OpenAI. So this is as friendly an audience as you can possibly get.
Right.
The guy needs you to succeed.
He is literally invested in your success.
Literally invested in your success, and you are his biggest investment. So as softball or whatever as possible. And the guy probably thought that, look, let me at least pretend to be having a genuine conversation. So let me ask the one question that this guy probably has been briefed on and has a ready answer for, like 10 minutes into a longer discussion, right? So he asked how a company with $13 billion in revenue can make $1.4 trillion in spending commitments.
Yeah.
And Sam Altman's answer is glorious. And you've heard the criticism. First of all, we're doing well more revenue than the 13 billion. That is being. Second of all, Brad, if you want to sell your shares, I'll find you a buyer.
Oh.
I think there's a lot of people who would love to buy OpenAI shares. I don't think people, you or me, people talk with a lot of like breathless concern about our compute stuff. So lots of people that would be thrilled to buy shares. So I think we could sell your shares or anybody else's to some of the people. Yeah, quickly. That's always a good sign, right? That you are completely not having a God complex, too big to fail complex. Always good to know. So that's a good start. So yeah, some other news around like coming out from the earnings reports. Sam Altman has told investors, not from the earning reports, obviously, but he's generally said that expect years of heavy losses as OpenAI invests to be a leader in technology that he believes will transform the economy. Whether we burn $500 million a year or $5 billion a year or $50 billion a year, I don't care.
Yeah.
Always a good sign. It's going to be expensive. It's totally worth it.
What is that line? We spared no expense.
Spared no expense. Yeah. Though that was like one celebrity doing one voiceover for a park. I don't think it involved like H100 GPUs. So now coming to Microsoft's earnings report, which I briefly mentioned last week. There was a charge that caught analysts by surprise, a $4.1 billion hit on its investment in OpenAI. Yeah. This figure was up 490% from a year earlier, which implies, but this is vague because there's a bunch of ways to figure out what this means about OpenAI's losses, but it implies a more than $12 billion quarterly loss at OpenAI. So not even burn, loss, whatever that means. A $12 billion loss in 3 months would mark one of the largest single quarter losses for a tech company in history. not far off from the $13 billion in revenue that OpenAI has told investors it's on track to take in the whole year. So
And
13, $12 billion a quarter to make.
still argue that Microsoft doesn't have full visibility on
Yeah.
whether that is the actual extent of the losses.
Yeah. There's also more on that, but yes. But yeah, overall, it's been a bit of a wobble. Palantir fell 11%, Nvidia dropped 7%, Oracle lost 9%. Of course, some stuff came back. But yeah, the challenge is how much leeway to give to businesses is what they're saying, what Wall Street Journal is saying. And Wall Street Journal actually had a headline saying Microsoft needs to open up more about its OpenAI dealings. Company disclosures on its OpenAI stake are scant. That is no longer tenable. When you've lost Wall Street Journal as one of the top 5, top 6 companies making most of all of the money on the stock market, that's a bit of a problem. So yeah, so a little bit on where the money is going in OpenAI is what I want to get into, which is assuming that they lost $12 billion to make $3.3 billion in revenue in that quarter. That means that they are operationally spending about $15 billion or more in a quarter. Right. Again, it is confusing. Is $12 billion the burn or the loss? Or how do you even compute that? I don't know enough. Right. And I don't think there's enough clarity on any side to make this, to clarify, to clearly figure this out. Right. But the promises that he's been making, and again, a lot of this is, I will refer back to Ed Zitron's reporting. Amazing guy, amazing research. I have paid more for an annual subscription to his premium newsletter than I have paid for Mint plus Wall Street Journal combined. Partly because, yeah, I read everything he writes, but partly just because, yeah, like amazing the amount of research the guy is doing and backing up. But yeah, he's promised $38 billion over 7 years to AWS, which is the new deal. $300 billion to Oracle over 5 years, $22 billion to CoreWeave over 5 years for compute. And the recent Microsoft deal said that they've committed to spend $250 billion on Microsoft Azure, which would include their existing spends altogether. So, and Sam Altman himself tweeted, oh, this is an interesting story also. You must have heard the backstop story. No? Their CFO at a talk said that what we need is support from the federal government. We need a backstop, right, for our compute spending. And people are like, oh, these are the anarcho-capitalists. These are the libertarians running to the government for a bailout. So that put everyone in damage control mode. And they said, no. What she meant, she misspoke. She didn't mean backstop. Sam Altman is like, she just meant like government support, the lender of last resort, the insurer of last resort, which is backstop. So just the word you shouldn't use. Right. But yeah, so there is this phenomenon of fairly obvious now that Sam Altman is trying to insert OpenAI in the middle of everything just to become too big to fail. That if I go down, my company goes down, the economy goes down with me. It's working or not, but at least finally people are getting fairly antsy about that. So he himself tweeted then this long diatribe to comment to justify the backstop comment that we're looking at compute commitments of about $1.4 trillion over the next 8 years. Spend. And this is just compute. Again, this is one area out of multiple areas that they will be spending on.
Yeah.
Right. There's salaries, there's real estate, there's admin, there's everything else. So, which also means really interesting that if he's planning to spend, yeah, and he said that by 2030-ish, they will be at hundreds of billions of dollars a year in revenue, which is nicely specific, right? Hundreds of billions of dollars a year. That's exactly the kind of figure you want to hear from the company the economy depends on. So, which means that whenever we've spoken about the whole DeepSeek thing, the China thing, the efficiency thing, these guys they aren't even anticipating that efficiency will be improving at all.
Yeah.
Over the next 5, 7, 8 years. which is very obvious because if you're saying that you will be spending $1.4 trillion on compute in the next 7-8 years, so let's say it will grow to about $250 billion a year. And you're saying that you will be making revenues of hundreds of billions of dollars. If he's talking about hundreds of billions of dollars a year in revenue, which means I would assume that colloquially means $400 billion a year, right? Though, of course, I'm assuming that he doesn't have that, whatever, but yeah, right.
Yeah.
He doesn't mean $1 trillion, right? So, if that's what you're assuming and you're talking about spending $250-300 billion a year in compute, all through your mental map till like 2032, 2033, that means this industry, the American side of the AI boom, bubble, whatever you call it, not boom, has completely given up on getting any kind of efficiency in their compute ever. That for me, that is actually more telling than anything else, that they don't even see it coming. So yeah, compare this to a typical SaaS, whatever. If you look at their earnings, Meta's quarterly operating expenses were $30 billion on net income of $15 billion. So basically revenues of 51 billion and operating expenses of 30. So that's a very healthy profit margin.
Yeah.
Right. Microsoft had operating expenses of $39 billion on revenue of 77. So that's almost a 50% here gross margin. Right.
Yeah.
Versus OpenAI is talking like even 7 years later, 6-7 years later, we will be spending 70-80% of our revenue on compute costs alone. So there is absolutely no chance of profitability and there is absolutely no plans of bringing efficiency anywhere into the mix. Thoughts?
What if he's holding back on that because maybe he doesn't have a timeline for it, but eh, it's inevitable, man. Some sort of efficiency is going to kick in here, just because so much of the planet's resources now are chasing this goal. Even if somebody accidentally stumbles upon it,
Hmm.
because the development is happening in so many different places concurrently.
And by the way, the efficiency has come on the other side of the planet.
Yes, exactly. So the precedent is there, and there's no reason why. I mean, it's not a zero probability that something like that could emerge from the American ecosystem as well. And then it would look great for Sam Altman to come and say, oh, we have achieved this breakthrough, and therefore we only need to do like half the capex that we planned. It's going to screw over all the guys who, like Oracle, it popped after the deal was announced. The stock price is back to where it was before the announcement. Right? It's going to screw all those.
Oh, Oracle's already fallen that much?
Yeah. It's back to where it was.
Wow.
So it's going to screw over all these guys who are enjoying the ride in OpenAI's wake. And I mean the boating wala wake. The other wake will also come, but in a while. uh, it's a smart play, no? I mean, either ways, because you can't predict with any certainty that a breakthrough will come. Why not hold back and surprise or dazzle investors and the public with that? Oh, look, we stumbled upon this, or we have been working hard behind the scenes and we have achieved this. Because if nothing else, Altman will package the breakthrough, this
But
theoretical.
also, OpenAI is not public. It will end up screwing over all these companies which are public, like massively screwing over.
Yeah. You're really setting me up fully for my story, which is that we should be allowed to invest in these companies.
I would not want to invest in Oracle right now, but again, not investing advice. Please go ahead and do whatever you want. I don't know anything. So,
But
yeah.
yeah, so it's I think
But how does that even square with these commitments that he's making? Which I am assuming are
he'll renege on those. That's all.
fair.
How do you think that negotiation went? Do you think there's a penalty clause the Oracle did not have the, to use Trump's metaphor, the cards to negotiate for a penalty clause. That if you can't spend these, I don't know, I haven't seen the contract, but just based on what I know of the situation and how fluid it is, neither party would have made any commitments. Similarly, I'm sure Oracle can also step back and say, no, we're not doing this. Both of them wanted the announcement in that moment and they both got it.
Hmm.
That's it. As I've been telling you, even every time we've spoken about this story, these commitments will not actually come to pass. So it doesn't matter. It doesn't matter. If it was quadrillions instead of trillions, it still wouldn't matter.
Yeah, but again, there are stock market valuations riding on these figures.
Yes, and buyer beware, you know.
Fair.
Simple as that. Buyer beware. The the argument that you're making to me sounds like okay, I spend an inordinate amount of time on the Porsche configurator website. I do not have a Porsche. I cannot afford a Porsche. I don't think I'll be able to afford a Porsche in the near future. Anyways, and you in a car configurator you can spec your dream car. Start with the base model, or which variant you want, and then specify the interiors. And Porsche, especially, is notorious for this. You can pay $7,000 for a stripe on the bonnet and things like that. And it's like we're discussing that this build at $360,000 is better than this build at 390. No, I'm not going to buy the car anyways. What difference does it make? Let me fantasize with the 390 or 500K car. What
So
difference
fair.
does it?
So then we are on the same page that after reading earnings reports as your non-fiction read, you can always look at Sam Altman's statements as your fiction read of the week.
Yeah, and there's no malice here. He's performing his job well. His job is to sell the dream and get enough resources to build this thing that, again, I'm making a good faith argument here. Okay?
Mhm.
To build this thing that he actually believes in, and will miraculously unlock, call it AGI, call it whatever, will miraculously unlock this lever which will supercharge all human development. That's the premise, right? And if that means that collectively tech companies, it's a wildly profitable, give away a year of their profits or 2 years of their profits, it's a worthwhile goal. And if retail investors or even institutional investors want to ride the roller coaster on this lofty journey, let them. If they make money, good for them. If they lose money, they knew what they were getting into.
That is fair.
Yeah, I'm very happy with all these developments. With the magician who has managed to, like, whatever you think about him, he sold the dream, right? He has sold the dream. We have a fucking podcast where half the time all we talk about is AI. Without Sam Altman, this podcast wouldn't exist, or at least that subject wouldn't be so front of center every single time.
Yeah, like I might have been talking about the other, whatever other bubble they would have picked up after COVID, right? Like I spent a lot of time reading about blockchains and crypto.
Yeah.
Hmm.
So
So
if he believes in it, and he does genuinely believe that there is something coming down the corner, it's fine. Now, if it comes out in a year or so that it's all just a sandcastle, and like if he is another Sam Bankman-Fried, then that's a problem. But as long as there's no outright fraud, if you're selling a dream and the dream doesn't come to pass, that's okay.
it, okay, at
That's
what point?
learning culture, right?
No, so then I want to get into at what point do projections and fraud, like if you're unlisted, then is there no such thing as having commitments that you can tell that there is insane amounts of obfuscation happening. The projections keep wildly changing, the costs keep wildly changing, the compute spend keeps wildly changing month to month, right? You can tell that these are not real figures. You can tell there's a lot of bullshit going on.
Yeah.
So yeah, how would you distinguish that from fraud?
It's not a listed company. That's fine.
I don't know
This is the whole point of in the US. There is a qualification bar. Like you need to have above a certain income, which they have equated with being sophisticated enough as an investor to invest in these companies, right? Because they are significantly riskier than public markets because of disclosure requirements.
Hmm.
And as long as he needs to keep this Wizard of Oz uh, pulling levers behind the curtain thing going, he's going to stay private, and that's fine.
Oh, they did announce for 2 days this week, for 2 glorious days this week, that they're going to do IPO in 26 or 27 before saying, nah, we have no plans.
Yeah, they cannot. They will go to jail immediately.
Yeah.
This is a tripwire they do not want to touch. And as long as they're staying private, it's absolutely fine.
I'm guessing it probably, they were also surprised by the reaction when they said, oh, we want to IPO next year or the year after. And people are like, yeah, we'll get to see stuff.
Yeah.
And I'm guessing they were surprised by that reaction. Like, oh shit, what are we talking about? Why are people enthused?
It's a trap.
Yeah. Last
I
point.
baited on the podcast 3-4 weeks back. I baited Altman, right? Come, get public. He won't. He can't. In the present state, they can't. They will do this when they're either uh, they're going to crash and burn, like this is the end. That's when they're going to finally push for the IPO, which will mark the top of the bubble, or when they're on the cusp of super intelligence, let's call it that. And it's so cool when they finally file that. What's it called? The equivalent of our red herring prospectus.
S1, I think it's an S1. Oh,
S1, yeah. When they
Yeah.
finally file the S1, is going to be even odds on whether they are about to run out of money or they are on the cusp of super intelligence. And as a the public market investor, I love that. That's the whole point, right? Can you then sift through the data, look the man in the eye on YouTube videos or whatever, and decide, is this man bluffing or is this the greatest investing opportunity of all time? And is there still any money left on the table? Which brings me back to Lenskart. Great company, but I don't think they left any money on the table. We'll find out on Monday. That's when the stock starts trading. Uh, yeah, and I can speak about it because I didn't apply for the IPO and I don't intend to be an investor either way. But it's your wish. I like the company. I don't think I'll be an investor in the near future. So let's see.
Yeah. Last point in my story is around depreciation, which is what a bunch of these.
Going to bring it up. Awesome. Go.
Yeah. So yeah, which is what a lot of these so OpenAI doesn't seem to be actually investing money in compute directly, which runs counter to what I've been saying in the last couple of months. But yeah, he's also been saying it, so it's fine. Right. So it just seems that they're going to get it through compute, through Oracle, through CoreWeave, through Microsoft, through AWS, through everyone under the sun, but not do it themselves, even though they have been, never mind Stargate, Abilene, whatever. Let's not even go there. So the guys were actually putting the money into GPUs, right? To make any money, let's say they want to make like double the cost, which is not a nice return on hardware at all. If I invest $10,000 in a GPU, through its lifetime, making $20,000 on it would be terrible, I would assume. Right. And for even that, right,
And painful way to burn money.
so even to do that, and again, Edzitron's done some fantastic research into this.
Oh.
I keep running into paywalls, man. I can't do any research anymore because everywhere there is a paywall. I can't spend money on like 30, whatever. I can't spend money on online sources where I will read one article in a month, but they will keep charging my card every month. So, yeah.
I'm telling you, either we start a GoFundMe and get our viewer to sponsor our subscriptions, or the better, more lucrative way is we start an OnlyFans. Trust me, bro.
OnlyFans would be a nice
subscription you need.
OnlyFans is a good name for a GPU company. But also to our podcast viewers, I am making an open statement here. I would like you all to give me a $1 trillion pay package. And I expect approval. Otherwise, I am leaving this podcast. $1 trillion in cash, unmarked bills in my parking lot basement on Tuesday. Yeah, I'm done. That can fund a lot of paywalls.
Back to depreciation, you were saying.
Yeah. So, again, reading off from what he's saying, every single hyperscaler is all these companies. It's a very cool term, right? They will have to take something called
Branding is on point.
branding is absolutely on point, and but that AI is stable also in your head. Yeah, yeah. Hyperscalers, Star Cloud, Stargate, absolutely on point, right? So the A100, which started shipping in 2021, with prices in the $13,000 to $15,000 region, today they're down to around 8 to 10,000, right? And the problem is that if you are assuming when you buy these things that you are going to run them 100% of the time to make like $2.50 an hour on compute revenue, you're assuming that for 4 or 5 years you will be running them. They will be making you money 100% of the time, which A, never happens. And B, the bigger problem is that Nvidia is making crazy money, and they have committed to releasing a new GPU architecture, a new GPU, let's say, right, every year. So therefore, the revenue from older models is also falling drastically. So according to this thing called the Silicon Data Index, right, the average price for an A100 GPU is around 99 cents an hour, and 198 an hour for an H100, down from 214 an hour only a few weeks ago.
Yeah.
And at launch, it was $8 an hour. So it's come down to like 25% of what it was at launch a couple of years ago, which will happen because these are, if I am buying compute on an hourly basis, I will want the newest model.
Yeah, you want to be on the cutting edge, right?
Absolutely.
No.
So, and a lot of these prices are falling even further, but the average is being skewed by hyperscalers trying or continuing to charge more than $4 when competitors can go as low as 10 to 15% of that.
Right.
So Microsoft bought 485,000 H100 GPUs in 2024, around $13.5 billion worth. Meta bought about $7 billion, Amazon about $6 billion. That's $31 billion, including Google also. That, on which, if you want to double it up, they would need to make about $60 billion of revenue by around 2030, at which point they're like 8 to 9 years old, which therefore is not going to happen. And so last week or last week, I said that I'm not really, I don't have any problem personally. Who am I to have problems? But yeah, I don't think water usage is that big a problem with AI. I think that power usage is absolutely a crazy big problem. It's everywhere people set up AI data centers, their power bills are rising like drastically. So, and these GPUs, even when you're not billing them, they are still on, they're still running in the data centers, and they're still consuming a lot of power, which is costing these companies. So, yeah, depreciation is going to be such a huge, like writing off these investments is going to be such a huge issue over the next few years. And brings us back to that point of these are effectively utilities doing massive hardware investments that they will have to write off soon. And how long can they hold off is the question.
The time frame you're projecting is too long. I mean, if I was not accounting advice, but if I was if I was a CFO of one of these companies, my suggestion or my advice would be to depreciate them completely in 3 or 4 years, each of these GPUs.
The thing is, the math gets very fuzzy because companies aren't releasing AI costs and revenues separately. Like even breaking up that figure of like $45 billion in total AI revenue across the industry in 2025. It's very hard to break up because OpenAI is saying $13 billion. Microsoft reported their AI revenue twice, right? And it went up to like, they said $13 billion of annual revenue at one point, and then just like Jan this year, they just stopped reporting. So, okay. No, in fact, monthly, they said October 24, they said it was making $800 million a month, $10 billion ARR. And then in Jan 25, they said $1.1 billion a month, so about $13 billion ARR, and they just stopped reporting that figure. We know a lot of this is just basically imputed revenue from OpenAI, from selling compute to OpenAI. So that $45 billion, how much of that is actually double counting and not actual end customer revenue? We don't even know. So, yeah, very fuzzy numbers.
And also probably counting at least part of MS Office revenues under the AI head.
I
So
still don't know what Copilot does.
forced Copilot into it. Yeah, that's probably why it's there. So that it didn't count under that head.
I don't know. Actually, so no, I don't think so. Again, no way of knowing. Because if their ARR was $13 billion, which means they did not make $13 billion from AI revenues,
Yeah.
or whatever. And we know it, or we think, I think we know, that it includes the imputed cost of Azure compute provided to, one second, provided to OpenAI. Right.
Yeah.
If that's $10 billion of that 13, then there's no revenue left over, or hardly any revenue left over. But also, what could it include? Because there's no pure play open AI products that Microsoft is selling, which are not bundled in with everything else.
Yeah.
Like Google has Gemini, OpenAI has ChatGPT Pro, right? Microsoft has nothing. Again, Azure, they might have some, they might be providing some added services on top, which are like AI compute, whatever. But if so, then they're not really making much revenue from that.
Yeah. This will have an unexpected side effect though. Let's take two scenarios. One in which the AI gravy train just keeps going, and every 5 years, say, they have to upgrade all the graphics cards in their data centers, all these hyperscalers. Depending on how quickly they depreciate it, they probably won't pay taxes for a long time to come. Right? And that's nice. The utility balance sheet, that's how it will look. On the other hand, if they front load all this spending and the bubble pops and they liquidate some of the GPUs and then just keep some going for repurpose them or whatever, then that depreciation will help them save taxes on their core income, which is still going to stay intact. And they're again not going to pay income taxes for a very long time. And this is big enough to actually materially affect US tax inflows.
This is a very interesting hypothetical, that what happens to all these GPUs later, if and when the bubble actually pops, because in a way they're GPUs, right? We can still use compute. There's so much computing going on in the world. Let's say the financial bubble pops because suddenly AI is much more efficient and can just take over so much computation from the world, right? Financially, these guys are screwed because they can't then make those revenues they're projecting, because it will be commoditized. But these chips can still come in handy. The flip side is that the life cycle of these chips is still going to run dry at some point. Newer chips will keep coming out, newer GPUs. And also, they are optimized for inference on current models, it seems like, alone.
The use case would be mining crypto.
Oh, lovely.
So the history of NVIDIA is so amazing. Jensen Huang properly rode the gaming PCs wave when kids wanted the the newest, the best graphics card to support the increasingly complex titles. That was a great wave. He wrote that. Then crypto came. I said, oh, my graphics cards can be used for mining rigs. Wrote that wave perfectly. And even today, most mining rigs are, not most, all mining rigs are based on GPU only, on NVIDIA GPUs only. And then when AI came, he said, yeah, I can do that as well. So
How does he know all this? Is he from the future?
maybe that's why he wears those leather jackets. Uh, in fact, he's 3 for 3, and therefore 4 for 4. If you consider that, he's stuck to the fabless fab models, a model of business for like 25 years. I would say if you want to know what's coming next in tech, look at what Jetson is positioning his GPUs for next. That's probably where the whole world is going to go 3 or 5 years from now. Whatever it is, he's actually a great indicator of things to come.
Yep. So that's my story.
These are actually really smart people.
Yeah, man, this can't be a coincidence. It is very easy to say he's stumbling into one wave after another, but
Yeah, and he's not the Forrest Gump of tech. This is all intentional. He didn't just happen to be there at each of these events. It's all intentional.
GPUs
He
for
knows
sure
exactly what he's
farming.
doing. Yeah. So yeah, these are smart people, and this is a great play, and they've stuck the landing. It's perfect. I I admire. I admire all of them for even if it is a sleight of hand. The fact that they've been able to pull it off is admirable. But now,
Yeah, that's my story.
one last thing, since we brought up crypto, a crypto wallet which has been holding, I think it was 10,000 Bitcoin or 1,000 Bitcoin. I don't know. From the early days of Bitcoin itself, finally liquidated last week.
What,
At
Satoshi?
1.2, no, not one of his wallets,
Yeah.
another one. Finally liquidated after holding for 15, 16 years. Finally liquidated last week for 1.2 billion.
Have people figured out who that was? Imagine holding on through all these waves, right?
Yeah.
Like if you imagine if you started mining when it was like 5 cents a Bitcoin or 10 cents a Bitcoin,
Yeah.
and it goes to $200 and you're like, no, I won't sell. It goes to $1,000, you're like, no, it won't sell. It goes to $50,000, I won't sell.
Selling at the top is tempting enough, but when it came from 50,000 to 20,000, why would you not think, oh fuck, this is going to go to zero, I should get out right now? Then nope, I'm going to hold on even then. It went to 120. Nope, I'm going to hold on even then. And finally that person or organization or whatever decided last week that yeah, we've had enough.
Wow. अब ट्रम्प आ गया, हमारा टाइम हो गया. Oh, is that why Bitcoin's been falling?
No,
It's all sentiment. It's all sentiment.
Bitcoin was already falling. So that wobble uh, made its way through the stock market, and they've somehow come back, or they're down just like 4 or 5% broadly. The Nasdaq, Bitcoin has had a fall, not by Bitcoin standards. It's not the volatility is an average Tuesday for Bitcoin. But by stock market standards and by bubble standards, yeah, it was a drop in Bitcoin. Not investing advice. It's difficult enough to buy Bitcoin in India already. Again, feeding into my second story of the week. But just you've probably made up your mind about Bitcoin already, anyways. Buy it or don't. We don't care. We're not advising you one way or
Yeah, like, yeah.
my story of the week. Story, not so much. No recent developments on this front. In fact, all signs are that this is probably the wrong time to pitch this story. But I feel passionately enough about it that I should put it out on the record. Indian regulators have made it very, very, very difficult for small Indian investors to invest in investment products broadly, but specifically equities, overseas. It's legal. It's not a gray area. Like Bitcoin, there are rules of how it is taxed. But in terms of systemic barriers, there are so many that for most people, it's just not worth it. Like the sheer extent to which mutual funds have been pushed, SIPs have been pushed by everybody from Sachin Tendulkar to your neighbor, how SIPs are amazing. All of that money is being pumped into Indian companies only. So there are mutual funds that are specific to like there are mutual funds that invest in the S&P 500 index, or there are mutual funds that invest in the Nasdaq 100. Parag Parikh's flagship fund invests or used to invest in Indian companies as well as specific US stocks. In fact, their stellar return, a large part of that is because of the US stock investments that they did. However, the government has put an industry-wide cap of $7 billion on how much all mutual funds put together, all the companies, that's the amount of capital that they can invest in overseas. And this includes everything: the US, Europe, the DAX, the Hang Seng, the Kospi, the Nikkei, everything put together. Nothing more than 7 billion in outflows. Okay, there's an industry-wide cap. Then there is a fund house level cap of, if you're a Motilal Oswal or an HDFC mutual fund, there is a cap on how much of your mutual funds can be invested in overseas equities. Then there is a specific fund level cap also, that if you have, say, a Hang Seng product that's investing in the Hong Kong stock market, there is a cap on that as well. That once it breaches that, what happens is immediately in the first step, they stop accepting new SIPs. That's the first hurdle. So if I advise you, Vineet, that why don't you start investing in the Hang Seng? And I've been doing it for 3 years and see these other returns I've got, or whatever. When you go on your broker app, you're going to see the mutual fund, but you can't start an SIP in it. You can withdraw if you already have units, but you can't put in fresh inflows. You can't start. My SIP is still going. The second level, when it comes dangerously close to the limit, is when even my SIP stops. That's it. No further inflows. And because people cycle in and out of these funds all the time, there are withdrawals that happen from these mutual funds. And so they go a little below the cap. And so for a small period of time, they'll allow fresh inflows. And then again, they quickly hit the ceiling and again, inflows are stopped. Basically, you can't predictably, consistently invest in these products if you are a retail investor in India. That's mutual funds. ETFs have an even worse problem. So even the ETFs have their caps, which are slightly higher, but they're still capped. So once an ETF hits that cap, no further money can go out. But an ETF is like a share; it's traded on the stock market, and the price is decided by supply and demand, not just the value of the underlying, like mutual funds. So if, let's say, you're a retail investor and you want to buy the Nasdaq 100 fund of funds, ETF, or whatever, an ETF, an exchange traded fund that's there on the stock market, you're going to buy it at the current market price, right? But the movement of the Indian ETF and the actual Nasdaq 100, there's a huge gap, a tracking error, because there's so much more demand here. And that money is no longer going to Google and Microsoft and Meta because the ceiling has been hit. So it is just, it's like a mini bubble, just there, where there's a deviation of like a lot between the underlying and the ETF itself.
Because of a huge supply side crunch.
Yeah, because everybody wants to have exposure to the Nasdaq 100, especially when they every week in, week out, on podcasts like this one, listen to the amazing earnings that Google is doing, that Microsoft is doing, that Amazon is doing. People want exposure to that, and so they just go out and buy the ETF at whatever price it is trading at. Take the market price, so they have a target, whatever. But it is not accurately reflecting the underlying, which is the point of an ETF, right? But for that relationship to hold true, you have to let it freely move, which is not happening. Funds have to freely move to the underlying and from the underlying. That's not happening. If you still say no, I'm very clear. I still want to invest 10,000 rupees every month in Google stocks. If you, Vineet, make up your mind to do that, there are multiple tech companies which enable that. There's one called Vested, Stockle. There are a bunch of these. And what they've done is they've tied up with US brokers. Okay, so you will open an account with Vested. For example, Vested will open an account in your name with Interactive Brokers or one of the US brokers. So okay, in theory, yes, that exists. Now, every time, every month, that 10,000 rupees that you send out, which is going to be what, $110, $115, you're going to be hit with a remittance fee by your bank for sending out money, right? And because the ticket size is so small, those fees add up, right? Vested will have a fixed fee for every transaction. Other interactive brokers will have a fixed fee for every transaction. You're paying a lot of gas fees to get your money there somehow. But even then, फिर भी we say, okay, fine, I'll not compare it to the Nifty 50 ETF that I'm investing in. Either थोड़ी inefficiency है, fine, I'll stomach that, no problem. In this also, there is a cap. If you, Vineet, send out more than 10 lakhs a year, there is a TCS on that. Yeah. So this includes your foreign vacations. It includes your international flight tickets. It includes that time you paid for Starbucks in the Singapore airport when you were transiting through. Any spend you make outside India is counted towards that cap. It's linked to your PAN. All these instruments are linked to your PAN. So once you cross that 10 lakh threshold, you need to pay 20% TCS. So to invest 10,000 every month, you need to put in almost 12,500 to actually make sure that after all these expenses and the TCS is not going anywhere. It's going to be counted towards the income tax that you pay in this year. But that's money that's not going to earn you any returns. Right? It's just you have prepaid your tax to the government, your income tax to the government. And finally, when you do your income tax filing and it turns out you paid more than your share, you'll get back the refund. But that's all you're going to get.
But also then in that 6 to 18 month period, if I'd invested that money, that 2,000 rupees, in an Indian fund and made like 10% on it, so therefore I've effectively lost 10%.
Yeah. Or at least lost the FD rate of interest.
Yeah.
Right? At least. Let's not compare apples and oranges, but at least, what is ostensibly
5-6%, yeah.
Yeah, a risk-free rate of return, you lost that. Right?
Yeah.
And on the other end, if you are a fat cat, then there is still a limit. You can't remit more than 250,000 US dollars a year per PAN out of the country into these investments. And again, there are restrictions on that. You cannot open FDs outside India. Cannot. For whatever purpose. Like if I know that my kid is going to be getting admission in a US university 5 years from now, and I want to start saving up, but I don't want to save in rupees because there is currency risk, right? I want to save in dollars. I can't do that. The only permissible investment is equity, not even derivatives, which is good, okay, but only equity.
But I know the bank account also, like even a checking account or something.
Checking account is fine. You cannot do it with the express intent of earning interest on it.
Okay.
And if you don't earn interest, so parking overseas will cost you a lot, no? Every year. Your only gains could possibly be the extent to which the rupee depreciates.
Huh.
Right? You can't count on that, and you shouldn't. So, with all these barriers in place, we'll get to why they exist, what the government's defense is. But what ends up happening is one of the first things that the behavioral biases that the CFA curriculum talks about is the home bias. That investors, even savvy global investors who have like the whole world open to them, tend to overinvest in their home country. That's called home bias because they're familiar with the companies, because they believe they have better insight into the fate of those companies, because they understand accounting better for whatever reason, however you want to attribute it. Investors have a home bias, and it's not healthy, because if you look at the MSCI World Index, Indian equities weightage is 2%, whereas for 99% of Indian retail investors, their Indian equities weightage is 100%. Yeah.
Hmm.
As
Biases.
much as we all believe in the India story, this is the equivalent of having all your eggs in one basket. Okay. The cardinal rule and the magic of investing is that diversifying gives you free additional risk adjusted returns. The more diverse your investments, the lesser risk you take and the better return you get. Okay, it's magic. And we are being denied that magic right now. By we, I mean the retail investors of India are being denied that magic. Let's put the odds at 1 in a million that something goes catastrophically wrong with the Indian economy for whatever reason. Okay, I'm not even going to speculate on that. But shouldn't it be the right and the prerogative of investors to hedge against that, to diversify their investments? I'm not even saying that we should be allowed to invest overseas because there are better returns. I'm not just arguing for US equities, which have had a stellar run for 20 years now. I'm even arguing that we should be allowed to invest in the DAX, which is terrible and gone nowhere for decades. In the Kospi, in the Nikkei, we should be investing. Most of us should be investing small sums in each of these markets. Because that's what diversification means, and we are being denied that. On top of that, here in India, debt mutual funds, first of all, there was no long-term capital gains until 2019, which most new investors are very surprised to hear. But then even when LTCG was introduced, debt mutual funds were also allowed the same benefits. Now that's no longer the case. If you invest in a debt mutual fund, your income from that is going to be taxed under your regular income tax slab, which makes it incredibly tax inefficient. So sophisticated investors are going to things like arbitrage funds, which promise the same rate of return but are taxed advantages. These are opaque instruments. They are not suitable for everybody's risk appetite. But because the regulatory environment is like that, first of all this money that's being pumped into the Indian stock market is going there because it has nowhere else to go. As a retail investor, FDs are pointless. They don't even keep up with inflation. I can't invest in debt mutual funds because it's close to an FD now, for all intents and purposes. Uh, I don't understand arbitrage funds or more complex instruments like that. I am chock full on gold ETFs, on real estate. There's already so much you can invest in these places, right? Especially with the cost of gold and the cost of real estate now being so high that it doesn't make any sense. Plus, we already, as Indian households, we already are over indexed on both these asset classes, whether it's real estate or gold. So it is our right, and we should be allowed to invest in equities broadly. This is an artificial depression that is being created around Indian equities, so that all the money flows in here, whether it is deserved or not. When these mutual fund managers get SIPs every month, over and over and over again, they have long exhausted their A plus ideas of these are great stocks, we should buy these. Then they move on to their A, then their B plus, then their B, then their B minus, because the money is not stopping, right? And the quality companies, in theory, have run up so much that they are no longer sensible investments. There isn't any headroom left for them, and it's such a competitive environment. So all the money managers are being forced to chase more risk than they would ordinarily have been comfortable with. Because if they don't keep up, if they stop accepting money, which in capital markets is considered like harakiri, okay, we are closing the fund because we don't have worthwhile investments. It's the most gentlemanly, the correct thing to do. When you run out of ideas, you stop taking money, you return money to investors, and either take a break or just leave. You achieve what you set out to achieve. Mission accomplished. Fuck off. But nobody does that because it's just so bloody lucrative. You know, Whether the investment goes up or down, the mutual fund industry is going to make its big every year. this is not good. It's not healthy. And now coming to the reasons that the Indian government gives for this, which is, we're protecting Indian investors. That's reason number one that's given, because they're children who can't be trusted with investing in obscure companies like Google and Microsoft. They should rather invest in MSME micro caps in India because that's less risky, right? That's the argument. Number one, that's a straw man, I know, but that's what's happening. At least some of this money ending up in shit companies which have no business attracting these kinds of fund flows. This is the reason for the uh, abnormally high uh, price to earnings ratio of the Indian market broadly, and especially the growth stocks. There isn't that much growth, but there's nowhere else for the money to go. Right? That's what I'm saying. The second reason that's given is we are trying to protect the rupee, because if we allow this, then there's just going to be an exodus of capital, and the Indian market will collapse, and the Indian currency will collapse, and all money will go overseas. My argument for that is, do you have so little faith in your economy and your companies that what's the nearest equivalent? This is it's like the arranged marriage setup, right?
Yep.
Bear with me. You're creating an artificial market constraint so that people who wouldn't ordinarily marry these boys marry them because they don't have any choice. And if you say no, if we allow our girls to go out and study and meet other boys, they will of course no longer want to come back and do household duties and marry our morons.
Like I see. Marry our morons. Shadi.com.
So
Marry our morons.
on the fiscal side, India is in a much better place than it was when these rules were put into place. Our forex reserves are 2-3 times higher, and our industry has matured enough. And अगर ये एक बार होना है तो let it happen. It's okay. Let people go out. Let them burn their money. The government solution for this,
Money.com. Marry our morons.
the government solution for this is Gift City in Ahmedabad. They're saying no, from here we'll allow everything, no cap.
That's a jugaad. I mean, if you're okay with no cap, then वैसे ही करने दो.
No, but again, the way it's structured at the moment, at least, it makes sense for large investors. Like Marcellus has an office there. They're doing some investing through there, and Zerosa still hasn't gotten anything in place. They say we want regulatory clarity. We want to understand all the implications before we open this to our investors, which is perfectly sensible. The intent there is not to offer world class investments to Indian investors. It is to have a global financial city so that capital inflows come in from there. That becomes the API through which the world economy, the world financial infrastructure plugs into India, and not so much Mumbai as it is now. That's the intent there. If this happens, if we are allowed to invest overseas through Gift City, it is a happy byproduct. It is not the core intent.
Yeah.
And the onerous regulatory norms still remain. It is a pain even if you go through Westate and you invest in Meta, say, and you're doing well on your investment, the dividend that they pay, it is so bloody convoluted. Of the US will tax it, then it gets taxed here. No one knows how to trade that.
And also, this is like what I was thinking when you were saying this earlier, is this is also adding risk, right? Because I have a certain amount invested, and I think here I want to pull out for a few months just for safety. I don't know what's going to happen in the US, but I might not be allowed to invest again because they've hit their cap or whatever through an ETF or something, right?
Yeah.
Or it's just so onerous. So let me just leave it parked there, which is increasing my risk. Second is, since every transaction becomes so painful and so costly, I might just think here, rather than doing 10,000 at a time, let me just do 50,000 at a time, just to avoid multiple transactions and multiple whatever, which is again increasing my risk. So yeah, they're adding to the risk.
And diversification is, to quote one of our friends, the financial system's only free lunch.
Yeah.
And we are being denied that for no reason. It pains me. I'm very curious to see how Zerodha finally implements it. They do have some entity in the gift city, or at least talks of one. But knowing Nikhil Kamath, he's not going to, not Nikhil, Nitin Kamath. Nikhil is the podcaster, bro. Knowing Nitin Kamath, he's not going to open this to the general public until he is absolutely certain that as a product, as a technology, and from the regulatory standpoint, it works. Because even now, ask ask your CA which brokers reporting is the best. Ask your CA. They will unanimously say Zerodha is the best. You can just directly plug that into your ITR. That's how beautiful it is. That's how cleanly, like, this is a priority for Zerodha. That regulatory, there should never be any complaints from our users that you did this, misreported this, therefore I had to face trouble from the income tax department or whatever. That's never been the case. They're very transparent. And they'll try to bring that here as well. I think that's the reason they haven't launched yet, where others have. But with PMFs and this PMSs and this not what I would call accessible. That's not true yet. I don't think it's going to be true in the near future. And I know I'm saying this when we are probably on the cusp of a bubble popping or more of these tremors going through the system. I don't care. That's not the point, because this isn't US centric. My rant isn't US centric. I'm stating that over and over again. We should be allowed to invest in China. If you have other problems with them or other geopolitical developments, fine, I get that. But in general, on principle, we should be allowed to invest in Sydney just as much as in New York, just as much as in Hong Kong, Tokyo, or wherever. That's our right, and it's good for everybody. You're denying a vast population. Like, if I don't know how to express how strongly I feel about this. Imagine 10 years of retail investors having invested in the Nasdaq 100 for the last 10 years. At least some of them would have. Where would that money go? It's not going to be at some point they're going to exit, and that money is going to come back here and it's going to be spent here.
Yeah.
Right? This isn't money that's just going away. It's going out and it's growing and it's coming back. It's good for you. It's not bad for you.
So on that note, let us close, because I swear this is not a metaphor. I need to move because we are literally installing a safety net.
God bless.
Not a metaphor.
Great.
Literally.
Great. Well done. Way to negate my entire half hour home. Well
But
done.
no, what you want is a safety net. What you want is exactly that. De-risking. I am de-risking my house for the cats. That's why I need to invest. No, I mixed up my metaphors now. So yeah, see you, Nitesh. Have a good weekend.
I'm good. Go watch Om Shanti Om. Bye-bye.
Yeah, Nitesh is going to watch Om Shanti Om today. I am going to install safety nets, and have a good week, everyone.
We need to do the Divangi hook step. Follow us on Instagram.
$1 trillion and I'll do it. $1 trillion and I'll do it.